Market master for the day, and Saurabh Mukherjee of Ambit Capital. He's here with us in the studio. Hi Saurabh, welcome to the show. Finally, we've picked up our act again and resumed the uptrend. What's the sense you're getting about the trend before the budget?
I think, look, I've never been the strongest on short-term calls. Clearly, what I can see is there's a great deal of expectation vis-a-vis the budget. Rightly or wrongly, a lot of investors are setting great store by the budget. And logic would therefore suggest that in the run-up to the budget, you will see a degree of optimism getting baked into the markets. Now, whether the budget will actually deliver on that optimism is a different question altogether.
Okay. Saurabh, hi, morning. One of the things we've noticed in the global markets is Brent crude has started spiking up again. Is that a fear in terms of any further sustainability of levels we could see on the Nifty?
Look, hard to make short-term calls on crude. Again, all I can say is there's a degree of...
when will crude become uncomfortable for us?
I think we're at a stage where even if crude doesn't fall any further, there's already half a percent of GDP fiscal slack that is getting created by Brent. And I think what will be very interesting to see is between now and the budget, Brent rises by another, say, 4-5%. How does that affect the government's calculations going into the budget? Because I think they will increase their outlay on capex, especially. There's been several noises from Delhi to suggest that it will be an expansionary budget where the Fisc will step up and spend a lot more on capex. And some of that extra capex spend that the Fisc, I think, plans to do will come from the slack that's been created, the 0.5% of GDP slack that's been created by crude coming off. So crude going up, I don't think the concern is more. I don't think the concern is about our CAD anymore. CAD seems to be firmly in control. The concern is, will this result in the FM taking a much more cautious view on fiscal outlay next year, given how central crude is to his fiscal calculations. But again, my central view has been over the last 3-4 years is don't focus on the short term in India, whether it is the budget, whether it is crude. There's enough money to be made in our country by just buying sensible investments with a long-term perspective, rather than agonizing too much about things like the budget or crude prices.
In fact, that was the question I was coming to. What are the sensible investments right now? You've seen this earnings season go by. What has your analysis been, and what are the sectors of stocks that you would buy post seeing the earnings this time?
I think we look at the shape of how the last couple of years have panned out. What we've seen over the last year and a half is a fairly healthy rally in cyclicals. So if you take names such as L&T, names such as the PSU banks, they have done very well over the last year and a half. And my sense is, as we go further into calendar 15, with rate cuts baked into the stock market, with a broad point of view that Rajan will cut 7,500 basis points, with a degree of buoyancy, degree of optimism about the budget, my sense is it does make sense to now start throttling back towards smaller cap cyclicals, and it makes sense to increase your weightage towards FMCG, pharma, and IT. So till last week, we had something like 80% of our portfolio in cyclicals. We did a pullback last week. We reduced the weightage of cyclicals in our portfolio to 70%. And just to put this in perspective, till 6 months ago, we had 90% of our portfolio in cyclicals. So a pullback from cyclicals, which was 90% 6 months ago, 80% 10 days ago, is now down to 70%. We are still marginally overweight cyclicals, but we are pulling back because we think more and more optimism is getting baked into the stock market. More and more optimism is getting baked into the big bank share prices, into, say, something like an L&T or a cement stocks share prices.
So are you more confident on the Sun Pharmas of the world outperforming in this fiscal?
I think we don't have a stance on Sun Pharma. We pulled back our stance on Sun Pharma 3 or 4 months ago. But what I would look at is the smaller banks, the names such as City Union Bank or a DCB, which are plays largely on SMEs. I think the SME sector, the small business sector, should recover nicely as the economy picks up. I'm not so sure about the larger corporate, but I think the SME sector certainly will be a beneficiary of the recovery. So you're playing that through names such as DCB, City Union Bank. Quick disclaimer there, Ambit has financial interest in both of these banks, and Ambit ran the QIPs of these banks 6 months ago. Another way to play the recovery that we are going through is something like TVS Motors. Auto stock which has done well, a two-wheeler stock which has done well over the last year and a half. And I think with new launches coming up over the next 3 months or so, with its market share still a third of that of the Bajajes and Heroes, I think TVS Motors should be a natural play on a recovering economy.
What do you do with a stock like Eicher Motors post its numbers?
I don't have compliance sign-off to talk on Eicher Motors, but one point I'll make is if you look at the recent set of results, what is becoming clearer is that enormous boom we saw in rural India over the last 3-4 years, some of that boom is dissipating. And there's a whole bunch of names out there which flourished in that boom. And as the rural Indian boom perhaps moderates, there's a set of names in our country which I think will see more moderated results over the next year and a half.
Okay. We saw a big deal from Suzlon take place over the weekend. Saurabh, any views on what the trajectory of Suzlon could be going forward?
Sorry, have no views on Suzlon. Logic would suggest that you will see M&A pick up as the bull market rises. Buyers and sellers will reach more agreement on valuations than we've seen over the last 4-5 years, but no specific views on Suzlon.
Okay, we have 20 seconds to go. If you can just squeeze in what your FMCG recommendations are.
Again, I don't have compliance sign-off to talk about them, but my simple point of view would be it does make sense to buy more of this sector as we go into the next.
So the larger cap or the small cap FMCG?
Even in FMCG, I would say larger cap does make sense increasingly as we go into the recovery economy.
Alright, that's finished. So we have the market opening now. Let's take a quick look at that. It's opened about 0.2% higher, so there is a positive opening. Mid-caps are having a better showing this morning, so about 0.5% higher for the mid-cap index, and the market breadth looks good as well. Hindalco has been in the news, so that stock is your biggest gainer, up about 2.5%, followed by names like Sesa Sterlite from the metal space. Tata Steel is looking good as well. So these three stocks are up about 0.5 to 2.5%. DLF from High Beta is also doing well, up about to 1.5%. And then you have oil marketing companies like BPCL that are higher by about 1.5%. HDFC Bank posts its numbers, is up about 1%. And names like TCS as well are trading in the green at this point. So that's pretty much the list of gainers. KN India too is powering ahead, up about 1.2%. And a couple of names from the cement space like Ultratech, ACC, etc. are higher by about 0.5 to 1%. On the downside, Sun Pharma, as I mentioned, the numbers are below street expectations. The margins have fallen, and we've seen that after a while for Sun Pharma. So that stock is under pressure today. BHEL down about 0.5%. A couple of other pharmaceutical names like Lupin are also under pressure, so that is down about 0.9% or so. But that's about it. No great reasons to complain today. Mostly there are stocks on the winning side, and the Nifty is now firmly above that 8830 mark. But what about mid-cap sector?
Well, good opening for the broader markets as well. The advanced decline ratio is firmly on the advancing side. 600 stocks advancing to around 250 stocks declining. It's around a 0.5% gain for the mid-cap index as a whole. But Suzlon Energy is your big talking point. That one's gained around 13% at this point in time, up around 14% now. So the numbers have not really impacted the stock performance that we're seeing. It's just the Dilip Sanghavi 1,800 crore investment. Gammon Infra reacting positively to its numbers. Reliance Communication also up around 3.5% reacting to numbers. Bank of Maharashtra, where there has been an improvement in the net profit, so that is up around 3%, and something like a GMR Infra too is up around 2%, along with Eicher Motors, REC, all of them reacting positively to numbers. In terms of a couple of these coal block auctions and the stocks in focus on account of that, GMR is in focus on account of that, plus Sunflag Iron, that stock is up around 9% at this point in time. They did bag a coal block over the weekend, so that stock is higher. And on the downside, something like an Orchid Chemicals is sulking, so that stock is reacting to numbers. Prime Focus too, down around 3.8%. And there was a deal that took place within at least the radio space. So TV Today has signed an MOU with ENIL to sell their 7 radio stations to ENIL, so that stock is reacting higher, up around 1.5%.
All right, let's get back to Saurabh now. Saurabh, SBI held out in a tough environment. I mean, that stock is up about 1.5%. You were talking about PSU banks a while back, but what do you do with some of these banks that are still delivering despite a weak, environment?
The way I look at banks, whether it be public or private sector, I look at asset quality, I look at CASA growth, and honestly I don't quite understand where in public sector banks the traction lies. It's not as if they themselves are giving any comfort on asset quality, and every indicator is that asset quality will continue to deteriorate for PSU banks, with someone like a PNB, Punjab National Bank, probably being the sort of leader in asset quality deterioration. On CASA growth, I think we've sort of lost track of when was the last time we saw PSU banks actually move their CASA numbers forward.
But this has been
been the case for so many years
True.
now, Saurabh, and they're still performing, the
Absolutely.
stocks.
The stocks have doubled. I mean, many of them have doubled in the last year and a half on this whole hope of reform. We don't see the reform. We don't see, other than a few platitudes from the finance ministry, the occasional platitude from the finance ministry to inject a degree of confidence in these names. I'm still a little lost as to why something like an SBI, which trades at 1.4 times, where exactly the underlying fundamental support for that comes. So PNB, I would say, would be my highest conviction sell in the PSU world, and I think public sector banks is probably alongside L&T and say cement names like Ultratech. PSU names are probably where a lot of the optimism is baked in, optimism around reform, around a meaningful economic pickup, and I think that's where my biggest concerns lie. If you ask me why have we pulled back on cyclicals, a big part of it is you're seeing undue optimism in some of the frontline cyclical names, PSU banks, L&T, Ultratech, so on, and hence my pullback from this space. And I mean, my point of view is that you're much better off buying the smaller private sector banks who have SME exposure than worrying about the PSU names who have loaded up on power and infra, which sort of deteriorates on a quarterly basis.
Okay, HDFC Bank is also reacting positively to numbers, up around 1.5% at this point. Saurabh, for the next 10 trading sessions or 9 trading sessions up to the budget, we're going to get a lot of details and, expectations. What will be critical from a market perspective that you would hear or would like to hear on the budget?
I think firstly, there will be an expectation that the government will toe the line of fiscal discipline. Raghuram Rajan, I think the RBI flagged it in its 15 January statement that further rate cuts are contingent on fiscal discipline. So the market will be looking for comfort that the 3.6% 516 deficit number will be adhered to. I have my reservations on that front, but that is clearly a big area of market focus.
It's hiked up to 3.8%. Would that concern the markets?
I think till 2-3 weeks ago, most CIOs I met were very sanguine that more government spend at this stage of the cycle is a good thing. And I think at the moment, there is a degree of faith in the government, and hence 3.8 probably won't send too many jitters. But if you think out 8-9 months as the honeymoon period for the government ends, I think 3.8, 3.9 might come back to haunt them 8-9 months out. So from my perspective, the closer they are to 3.6, the happier I will be. The second area where I think there's been a considerable amount of optimism is that there will be more capex from the government. Again, both the chief economic advisor and the head of Niti Aayog, or the vice chairman of Niti Aayog, have both flagged the need for further capex by the government. So defense stocks, road builders, affordable housing plays have all rallied on that premise. So it'll be interesting to see what they come up with on that front. And finally, the recommendations of the 14th Finance Commission. Remember, this is a constitutionally created body. It reports every 5 years. And in this budget, the government will have to reflect the recommendations of the 14th Finance Commission. And my hunch is some of those recommendations will be a little painful for the centre.
Okay. Finally, one last question. You said IT stocks is something that you'll bet on. But, names like HCL Tech have already given 25% returns this year. Would you still stick to the top tier names, or do you look outside the index?
Our sense is that IT as a sector, names such as TCS have compounded at such a rate over the last 3-4 years in spite of their huge size, that this is a sector where, with the currency being where it is, with America in reasonable shape, American economy in reasonable shape, IT as a sector should hold up quite nicely. I don't think I'm expecting anything outstanding from the IT sector, but our top plays in the IT sector, which have been relatively consistent, our top plays in the IT sector have been fairly consistent over the last couple of years, I think should continue delivering. And from a portfolio allocation perspective, I would rather lean towards IT, FMCG and pharma, rather than spend too much time worrying about agonizing on PSU banks, L&T and the cement stocks.
All right, Saurabh, I understand you have a meeting, so we'll let you go on that note.
Thanks.
You have a good day. That's the word coming in from Ambit. Don't worry about the budget and all the other noise. Just go out there and buy good quality names.